The broadcast is now starting. All attendees are in listen-only mode.
Hey, good evening. Hey, appreciate everybody's time. This is Greg Wood with Silver Stream Advisors. I wanted to have this special webinar primarily because we do get a lot of questions from individuals. Many of our clients are not seasoned tax pros or even individuals that spend a lot of time studying the ways to maximize the benefits of taxes, etc. So even though I am not an expert in taxes, nor am I an accountant or CPA, we at least thought it would be good to give people some basic strategies and maybe a couple key things that you could take away from this and talk to your accountant or CPA that might benefit you in the future. So appreciate it. Take notes, ask questions, but I do want to again reiterate I am not an expert, and if I misstate, it's because of the fact that I have not planned or studied too much about this. But it is some ideas that I've implemented in my career, things that I've literally made mistakes on, paid too many taxes at times when I could have utilized a strategy. So we want you to learn tax planning. Many of us think it's only for the super wealthy, because if you make $1 million, $2 million a year, you don't want half of that to go to the government, obviously. You want to keep as much of that as possible. And the truth is most Americans could save thousands of dollars every year if we followed the strategies of the millionaires. I literally met with a couple this afternoon about setting up an LLC and what they could do, all the expenses that could possibly run through that if they just strategize a little bit and pay bills, some of these expenses pre-tax, because they're using their personal income, what's left over after it's taxed, to pay some bills and expenses that they literally wouldn't have to pay taxes on if they do some certain strategies. So we're here to teach you some things that have been utilized by the ultra wealthy, by the Warren Buffetts and Bill Gates, etc. And in addition, we're going to talk a little bit about the real estate money machine. This is a phrase we have trademarked. And again, to interrupt, I want you to ask questions. I will do my best to answer those, or if they're very detailed type of answers, then we can go ahead and schedule an appointment to discuss that. So we have put together a time-tested way of creating wealth with little to no risk. This says no risk. There's no such thing as no risk. I literally could die leaving this office, and that is risk of me driving away. But now is the time to own amazing quality real estate across the nation in select markets at the right time, giving returns that are phenomenal. Now, we show typically 12 to 20% net. We have a brand new property that we are going to unveil, I hope, tomorrow. And please take notes if you'd like to know about this. There's only 9 of these homes available. They are brand spanking new houses. Easily would sell for $140,000 near a golf course community. Very good facade, double awnings on them, and brick facade, as well as hardwood floors, fireplaces, granite countertops, all stainless steel appliances. Very nice homes, 12 to 1,500 square feet. We have the exclusive rights from the developer to sell those homes. And we've actually put a handful under contract, and we're going to sell those to you. Those won't make the typical 12 to 20% because they are literally brand new, but they have tenants paying $1,100, $1,200 per month on the homes that are going to range about $120,000, $125,000 per home. But that is something we are only going to give for a limited time because right now there's only 9 of those available. So we want you to take advantage of this amazing opportunity, and we've created a very systematized way for you to piggyback off of all of our efforts and work to benefit your family and your future. The biggest business expenses right now for everyone is taxes and lawsuits. We put on here that 1 in 4 will be involved in a lawsuit this year. We also know that almost everyone will be involved in any lawsuit, one form or another, in their lifetime. And we want to have you avoid that at all costs. It's very important for you to recognize that that is something that could cost you dearly if you don't strategize properly. In addition, that many people are paying this high taxes, 40–50% of their income to taxes. And you can look at that, 35% federal, 9.5% to state, potentially, unless you live in a state with no state income tax, as well as FICA. In addition to the 7.65 FICA, the employer has to pay another 7.65% on top of that. So it is quite extreme. The rich, and this has hit the press quite heavily as of late because of the Republican candidate Mitt Romney, as well as Warren Buffett being scrutinized, that they're paying too little. And the rich do learn how to pay the least amount. And Warren Buffett says the billionaires should pay more, but I don't see him sending in more. He has an army of lawyers that constantly figure out how to pay the IRS late or very little. And it is up to us to learn those strategies. So we want people to understand that it is your job to first learn the rules, then follow those rules once you learn them. Because if you don't learn those rules, you are paying too much. And only the educated, and that's what that we teach people, is there are two tax codes, one for the educated and one for the uneducated. We want you to be educated and discuss these with your accountant. Most accountants don't volunteer the information to you. You have to ask them, hey, what if I set up an LLC? Will I save money? And they're like, absolutely, you'll save money. And then you could say, why didn't you tell me about that? That's not their job. Most accountants and attorneys are not entrepreneurs. They are trained in doing what they do, and they want you to ask questions. They will answer it. So one thing that real estate can be, let alone any business, but we want to focus on real estate, is it an asset or a liability? If you don't set your entities up, yourself up, and do the right type of transaction, buy the right type of properties with the right type of homeowners insurance and in the right entity, it very well could be a massive liability to you. And if you don't structure this right, you will definitely create problems for you and your family. So we want you to pay the right amount of taxes, not over, not under, the right amount. And if you're not educated, you absolutely could make a mistake. Why not under? Well, you could get in trouble for doing that as well. And you should never, ever own real estate in your own individual name. I've seen clients ill-advised. I tell them they've got improper advice, and they will put loans in their individual name or buy real estate in their individual name. That is a big no-no. It definitely creates a target for you to be sued and find where all your assets are. Because many lawyers are trained, especially we call them ambulance chasers, or those that look to find ways to sue people that have money, is they will do a search on you and your assets and say, oh, John Smith, who bought this property, I searched him, he's worth a few $1 million from what I could see, let's sue him individually, and you're open up for massive problems. So we don't want you to be entirely focused on just making a profit. What's important is that it's not how much you make that matters, it's how much you keep. If you make $500,000 a year and your company and your expenses eat up $550,000 a year, you're in bad shape, regardless of, again, how much you make. It's what you keep. And you need to be protected so that if the bad guys, and we're going to call them the bad guys out there, that look to sue you, or those that are of an advantage, that they will be diverted from that. Their lawyer would tell them, please stay away from this guy. You have no reason other than paying me, your attorney, a lot of money and get nothing out of it. And I've been in those shoes where I literally have sued people that deserve to be sued, and I spent thousands and thousands of dollars per case and got nothing out of it. But I said, you know what, out of principle, I am going to do it because these individuals need to pay for what they did. And I'm not one to be litigious. I've only sued a few people that owe me $500,000 or thereabouts, and they walked away, and I thought it would be at least worth the $5,000 to pay for that, to show that on their credit. And the only thing better than winning a lawsuit is avoiding one. We all agree with that. So let's talk about why using an entity. And I'm going to go through briefly the entities out there. I'm not going to go into in-depth details of every single one. An LLC is something that is very, very flexible. It's probably the most common entity out there. That we use that absolutely. We think it's important for people to recognize the benefits of an LLC, but definitely need to talk to your accountant about your specific situation and what you should and should not do. But very flexible, very easy to utilize. It is one of the newest ways to do create a company. Excuse me. And so it is very inexpensive and is very flexible for buying real estate as well as flipping real estate. If you have you want to buy properties and hold them, it is probably one of the best things to do is set up a limited liability company. Limited partnership has no Social Security tax. It does have lower state tax, but might not protect you as much as a limited liability company. And it is probably better to do flips. If you only do flips, then you'd probably consider an LP, and again, talk to your accountant about that. But it is more expensive. There's a lot more involvement on a limited partnership. So please look into that. A C corporation only pays 15% tax on the first $50,000. And many of the benefits go to the owners. You can deduct all kinds of things as an owner of a company or an employee as well. Now, there is a double tax that you need to look into, and it is a very complex structure and can be very expensive to run a C corporation. We advise people to talk again to your accountant about setting up a C corp to manage maybe an LLC, and then you can have certain things run through that. So it could be your management company that you could look into. But the advantages obviously are that first the 15% tax on the first $50,000, and for someone in a 30% tax bracket, that lower rate is very attractive, even though the money is still in the C corporation. But bear in mind that the lower tax bracket equals a total of $50,000, regardless of the number of C corporations you own. And owners often qualify as an employee. And qualifying as an employee has a number of advantages under the tax laws. And the primary advantage of being an employee is the availability of various tax-free perks. The traveling gurus out there, would make a big issue about that, the fact that they tend to overstate the benefits of being a corporate employee. As such, let's make a detailed analysis. If we want to, we could visit with you about that, of analyzing the prerequisites that gurus often claim. There's qualified pension plans out there, corporate pension plans, medical reimbursement plans, disability insurance. There's all kinds of things that you could look into. No interest or low interest loans. The company can lend up to $10,000 to each employee with no interest charged. Any additional loans, can be made based on IRS approved rates. But think about that. So there are lots and lots of benefits: health insurance, company provided vehicles, etc. Now, the disadvantages of C Corp being double taxed. And for tax purpose, you need to realize a C corporation is a separate person. That means that it is taxed on its income. Also, when it distributes cash to its owners in the form of dividends, the owners are taxed on that cash. And likewise, the C corporation distributes property to its owners, and the IRS pretends that the property was sold for fair market value and taxes the gain anyways. So lots of things to consider when you do look at a rental property. There's most states rentals should be held in an LLC. Regardless of the number of members, the LLC should not elect to be treated as a corporation. And we want the IRS to ignore the LLC if it has a single member, or treat it as a partnership if it has multiple members. And the reasoning behind this is rentals can generate lots of tax benefits. Many, and this I'm using this as an example outside of an IRA. If you buy real estate within an IRA, there's no reason to have tax deductions until you have a minimum distributions that come out, etc. Excuse me. So rentals can generate lots of tax benefits, and we use the transparent or pass-through nature of an LLC to preserve those benefits. And among those benefits that are there, we want the LLC to pass through its members the following: depreciation deductions. A huge thing to consider is the ability to depreciate, and what that simply means is you multiply the cost of a property by a fraction and deduct the result from your taxable income. And the fraction used will depend on the type of property that you buy or in question and how long the LLC has held it. So if you've owned a property over 2 years, it obviously has the best benefit. But I'll give you an example. In the second year of ownership, a rental building or property will generate depreciation equal to 3.636% of its cost. And while the carpet in the building is a good example, will generate a depreciation deduction of equal to 32% of its cost. And those numbers could change and have changed since the last I checked, but that is something to consider. In addition to the 1031 exchanges, if proceeds from real estate are properly reinvested in other really like-kind real estate, the sales proceeds from the real estate that was sold are not taxed. So if you do a 1031 exchange, you're just doing like-for-like investment, and there's no tax on the gain whatsoever. There's also long-term capital gains. If real estate is held for investment purposes as opposed to being held for sale, and the IRS asks you that when you do this, is this investment for sale? Is it something you plan to sell and you put it up for sale? Then they're going to treat it that way. If it's planned to be held, then it's a benefit. For more than 1 year, it is eligible for a long-term capital gain rates when it is sold. And thus, instead of being taxed as ordinary income, meaning your tax bracket, the real estate is 15%. That's what the rich are paying. They're paying long-term capital gains in many cases, whereas your tax bracket's probably much higher than that. There's also installment sale tax treatments that I'd love to talk to individuals. If you have the need to sell something on a long-term basis, installment sale is a great benefit. And there's no Social Security tax on rental income. Rental income is not subject to that at all. You do not pay yourself a salary from an entity that makes its money off rentals. You need a separate entity, and that's what we talked about, is hire a management company, probably a C corporation, that benefits from that. If you do, you will needlessly add 15% to your tax rate in the form of Social Security tax if you pay yourself a salary when you have rentals in an LLC. So please consider that. So S corporation, the next thing, an S corporation has a reduced Social Security tax. It does not have the double pass-through taxation, and it does have favorable tax capital gains. But it is not flexible at all. It is something that's very inflexible. It's hard to get assets out of a C corporation, so please consider why it would be of concern if you're setting things up in an S corporation. Let's see, and I don't want to go into a whole lot of details, about an S corporation right now due to time, and I am expanding this. I did a luncheon on this specific topic, and we're getting into a lot more details on this than I did the the luncheon. All properly maintained entities provide some degree of limited liability for their owners against the creditors of the underlying business. Something to consider. Whereas owning it yourself, you are 100% open. 100% open to be all your assets to be exposed to a lawsuit. And why should you use an entity? This is something I mentioned, but here's a point I really want you to take a note over. It's critical that you set up this weapon. This is something that I mentioned, that it's better to avoid a lawsuit than win a lawsuit. And this is the tool. This is the major weapon. What if I were to tell you that I'm going to sue you over tripping over your garden, the garden hose that you own on a rental property, and I broke my leg. I look it up, and I want to sue you, the owner of this property. I go to my lawyer. The lawyer does a little search on this entity, and it finds out that there's a charging order possible here. Now, this is what's important, is if you set up your entity properly, let's say you have a company that made $100,000. However, you have a management company that billed your LLC $100,000 for its services, and that C corporation, let's say, is you. So you're just billing the LLC, but it's still the LLC had that $100,000. I turn around and I sue you $100,000 and I win, but there's no money to get. The IRS, think about this, the IRS will tax me as if I received that $100,000. And in most cases, I will end up paying a $50,000 tax on top of my lawyer fees and court costs to have hypothetically won a $100,000 lawsuit against you, and I can't collect on that. Because you can only go after the assets available, the income available. I can't go after all the assets. I can go after the income. And yet there is none, and yet the IRS is going to bill me $50,000 for winning my lawsuit. You need to structure the entities to take advantage of charging orders. So the ideal result, again, to reiterate, of setting up an LLC or an LP, those are the ones that you need to set up to have the operating agreement state this charging order. And the operating agreement can provide that no distributions shall be made on a member's interest that have been encumbered by a charging order. What is the advantage of that? And using such language, it's simple and would not interfere with the normal operating of the business. And the creditor, this is what I just mentioned about, the creditor bears the burden of persuading a court that another remedy, i.e. the foreclosure of the LC or LP's interest, would be more appropriate. The disadvantages, and is such language has no independent personal business purposes. Its sole purpose is blatant asset protection. That is the purpose of the language of a charging order. That's the only purposes. And courts are more likely to overturn such language than if a separate non-self-serving purpose existed for the distribution structure. So it is important to talk to your accountant. They a lot of times don't know about it. Lawyers do, but it is very simple language that you can do there to protect your assets. And I'm going to summarize the charging order. That most states, a creditor cannot simply seize a debtor's interest in an LLC. Think about that. They can't go after a debtor's interest. Instead, the creditor is often limited to obtain a charging order, and that option is normally very unattractive to a creditor because it may get no cash from the levied interests, but be forced to pay taxes on the underlying income. So the charging order concept does not offer obsolete protection or absolute protection, especially if smaller single-member LLCs are involved. At a minimum, the charging order does put a debtor in a much better bargaining position with respect to creditors. due to the cost of getting around the order, the lawyer, the expenses, and et cetera, to fight that, and that's making the pessimistic assumption that a court will permit a creditor to get around the law at all. California is kind of a problematic state there. So think about that for a second. It is a great tool to utilize if need be. So that's one thing that we want you to take note of. Just write down charging order, major weapon, imputing income, and ask your accountant or attorney how you can set that up to protect you. The language has to be very specific and beneficial in that regard. And the management company bills the LLC for its income. We mentioned that as well. So there is none as well. So here's something that's of interest. The Supreme Court said, is the constitutional right of every American to arrange their affairs so as to minimize the amount of taxes they pay. There are two tax systems in the country, and this is what I mentioned before. One for the educated and one for the educated. Which one do you want to be? Obviously the educated, and we're trying to help a little bit with that. This goes back to an option for you to consider by having an S corporation to receive $50,000 income. Set it up for just the $50,000, and then you'll only pay 15% instead of potentially 39% or higher. This is just based on a $50,000 income. For example, in Utah, you'd be paying 25% federal, 7% state, and 7% FICA, 39% on that exact same $50,000 of income. We'd love to talk to you a little bit more. I know Bill Gates, a quote that he said, one of the most important things he learned in his professional career had nothing to do with computers, had nothing to do with internet. He said it was the working knowledge of the tax code was one of the most important things he's ever learned. So please understand that we are trying to help educate people. We do not charge for our advice. We can help set up LLCs. We don't do that, but we can help put you in the right companies out there that do set up LLCs, give you right advice. We have accountants that will help you. We have attorneys that could very well help you. We're here to advise you and help you find the right tools and education necessary to change your future. And we do have amazing properties available for you to consider, just like that brand new one. Now I have an amazing supply of properties. I've got a duplex that I think might go under contract tomorrow. It's a $65,000 duplex, generates $1,200 a month in income gross, and was built in the 80s, and it's fully remodeled. That is extremely hard to find, a 2,000 square foot duplex. It would literally cost $140,000 to rebuild this unit at its bare minimum. Again, that's without the land or building permits. That's just cost to build, $140,000, and you could pick it up for $65,000 in a great neighborhood. It isn't in a blighted neighborhood or very ugly neighborhood. It's a very nice neighborhood in Memphis, Tennessee. We've got homes for $40,000 that generate $800 a month in income. You name it. We'd love to show you what we have available. We typically have 20 to 30 homes at any given time that we could sell. But let us teach you a little bit about our company, what we can do. This is my direct phone number, 801-352-4029, and my email. We also have adopted a charity. We unveiled today that we adopted a local charity here that does benefit lots of underprivileged communities in the world, third world countries primarily. Their name is ascendalliance.org. Look them up. I just shot a video today with them with some national celebrities that work with Ascend Alliance, but we're proud to adopt them as our preferred charity that we would like to support and donate. So if there are no questions, I'd like to wrap the webinar up and hope that we can have you as a client, we can teach you a little bit, and we can learn from you at the same time. We are not going to say we have all the answers. We love to see how we can help you and create a great retirement for your family and your future. Thanks again for your time.